There are two ways you can enter trading the forex markets. So one is market order and the other one is pending order. So in this video, I'm going to explain what is market order and what is pending order. And I'm going to explain the different type of pending order that we have and when you can use each one of them. What is market order, or you can also say instant market order. So instant market order means when you enter a trade immediately at the current market price. So let's say now, for example, now we have a chart, we have a market now. So, and when price gets to this particular region, you want to enter your trade. Maybe you want to buy as this region, maybe you have a point of interest that you want to buy from, and price is currently at this region, so you want to buy. So immediately you enter that particular buy order, you click on buy, which means you are expecting price to continue going to the upside. So your trade is going to be executed instantly. It's going to be open instantly. So, and that is what market order is for buy. And for the sell, it's the same thing. It's just when you are expecting price to go to the downside. So let's say maybe price is in a downtrend and price gets to a certain region like this, and you want to sell from this region. So it is just place your sell and maybe you place a stop loss above here. So what? So far you enter it as the current market price, that is instant market order or market order. So, and you can use market order maybe when you want to enter a trade instantly, just as I explained now, or maybe you don't want to miss a move. Maybe price is already moving, you don't want to miss it, so maybe you now execute your trade instantly. Or maybe you see a strong momentum and you want to just jump on the trade, which is not really advisable to just jump on the trade randomly. So those are when you can use instant market order. So now, what is pending order? So pending order means your trade is not going to open immediately you execute it. It's going to be on pending. So that means you set your order at a specific price level where you want to enter trade automatically. So maybe you have so let's say this is the current market price, but you don't want to enter instantly here. Maybe you set a limit order here, which you know the price have not get to this particular region, so it's going to be on pending. Or maybe you set you have a limit order at this region, but so far price have not get to that region, it's going to be on pending until when price gets to that region. So that is when your trade is now going to open for you automatically. Or maybe price come here, it's going to open for you automatically. So that is pending order. So far you didn't enter it at the current market price, you set it as the future price. That's okay. Anytime price gets to that region, you want price to execute your trade for you instantly. So, and it can also help you that maybe you don't want to chase the markets, you don't just want to jump into the markets, so you want to wait for price to come to your zone. So instead of it just jump into the market, you want to wait for price to come to your actual zone before you execute the trade. We have 4 types of pending order. So the first one is buy limits. We have sell limits, we have buy stop and sell stop. So these are the 4 types of limit order that we have. Now let's break this down. What is buy limits? A buy limit is an order that is set that you want price to drop first. Let's say this is the current market price like this, and price is currently, okay, let's say this is the current market structure. So when price is currently at this region, but you don't want to buy at this particular place. Maybe you have a zone that you marked here and you want price to drop to this particular region first for you to buy. So that is buy limit. You are expecting price to drop first before it reverses to the upside. So in this case now let's say you set your buy limits as this price level here. Set your buy limits here. This is buy limit. So set the buy limits here. So that means your trade is going to execute once price come back to this region. Your trade is going to execute for you, and what you are expecting is that you want price to continue to the upside. That is buy limits, and for sell limits it's going to be the opposite. So let's say price is in the downtrend. So there is the current market price, but you don't want to sell at this particular region. So you want price to buy to the upside. You want price to go up to the upside before it's going to sell. So in that case, that is where you will use buy limits. Let's say you have a zone here that you want to sell from, but price have not get to that zone. So you now set your sell limits here. So which means you are expecting price to come to this zone first. You want price to go up first and then drop from that zone that you marked. So you want price to rise to this up first, then you want this to now drop from this particular region. So immediately price gets to this particular place that you set your sell limit, it's going to execute your trade for you automatically. So your sell order is going to be executed automatically. It's going to open automatically, and that is sell limit. So in just a simple terms, you want to sell above the current market price. So which means you will now expect price to go to that price level before it's going to drop. So for buy stop is majorly used when you expect price to continue to the upside. So let's say, for instance, now we want to use we have a structure like this, but you don't want to buy at this particular place. You want price to break this zone before you buy. So in this case now, what you will use is buy stop, because you want price to continue to the upside, or maybe you are anticipating that maybe price can rejected from this region and start selling. So you now set a buy stop that, okay, if price break this zone, you want to continue the buy. So in this case, what you will use is going to be a buy stop. So we can say buy stop is just what you use when you expect price to move up after breaking a particular zone. But so far you set it in above the current market price. You are expecting price to continue to go into the upside. So far you set it above this current market price. Even if you set it here, it's still buy stop. So far it's above this current market price, it's a buy stop. But in most cases, when you can use this tab, maybe you are expecting price to break a zone like this and continue the movement, because price can do something like this, come to that zone and start selling. Maybe you are trying to avoid that kind of situation and just decide that, okay, if price break this zone, you want to continue the buy. So in that case, you can use buy stop order. So you use buy stop, and your trade is going to execute it instantly. It's going to open once price gets to that zone. For set stop, let's say price, we have a downtrend like this, and you are expecting price to still continue to the downside. You are expecting price to still continue to the downside, but you don't want to just sell at this current market price. So you want to sell maybe after price break this zone that we have here. So as you now set a order at this region. So this limit order that is set is going to be a sell stop. You set it below the current market price because you are expecting price to continue to the downside. So in our sense, it's below this current market price in a downtrend. In a downtrend, so which means you are expecting price to continue to that downside. And once price come here, your trade is going to execute. Your trade is going to open. So that is sell stop. So simple, in just a simple terms, the sell stop is when you set your a sell below current market price. You set a sell stop below the current market price. So let me just try to label this. So this particular one, let me just recap. This particular one here is buy limit. So in this case, price was initially going to the up. It was going to the upside before we have AI low. So prices was going to the upside before, but this is where the price was at as of the time you open your chart, or maybe when you trying to analyze. But you are expecting price to still come down here before it's going to continue buy. So in that case, you can just set your buy limit here so that anytime price come here, you want to enter a buy. So that means in that case, you use a buy limit. So and for the sell limit, as the price was in a downtrend, which means price was bearish. So and as of the time you enter the market or when you are trying to analyze, this was where price was. This is the current market price, but you don't want to enter a trade here. You want price to still come to this upside before it's going to sell. So in that kind of situation, you set a sell limit. You set a sell limit that you want price to still come to this upside before it's going to sell. So and that is that. For buy stop, you use it in when price is going to the upside. So it is the current market price, but you don't want to buy here. You still want price to break a certain level before you enter the buy. So in that case, you set your buy stop above the current market price. It's going to be in front of the current market price, so above it. So you want price to now break that particular zone and trigger your buy stop. So and for set stop is when price was in the downtrend and you're expecting price to break a certain level before you will enter. So in that case, you now set your set stop below the current market price. So I think now you should have understand what is market order, what is pending order, and the four type of pending order that we have. Because mastering the entry is one of the first steps toward become a disciplined trader. You must understand all these things. So, and I think this video have already helped you. So make sure you subscribe to this channel, like this video. But if you are not in the Telegram channel before, make sure you join with the link you will see below this video. So be part of the community. Is beginner friendly. So and that's the reason why I'm trying to build up trader from scratch, both on the Telegram channel and on this YouTube channel. Like, subscribe, and see you in the next video.